Good evening, Chicago, and welcome to tonight's training. My name is Lunta Di La Paulo, and I am the founder of Yetu Accounting and Tax LLC. In our business, we help small businesses, individuals, and family reduce the amount they pay in taxes and hopefully make better financial and investing decisions, as well as taking care of their accounting and business advising needs. And tonight I want to share with you about critical steps to look at before deciding to buy a stock. So I'll walk you through the way that I usually look into a stock before considering whether or not to invest in one. So the first thing, the easiest part to do or to look at is to go, regardless of this the system you use. I usually go to finance.yahoo.com, and from here I will be looking. Let's look into an exciting company right now, Pfizer, right? Pfizer is one of the big companies in the COVID-19 vaccine race. Pfizer, Moderna, and Johnson & Johnson, and the other buddies. So let's look into Pfizer. So let's say you are really hyped and you wanted to buy Pfizer stock. So again, just a disclaimer, this is not an advising. I am not telling you to buy or not to buy this stock. So an investment decision have to be made based on individualized advising or counseling from a professional. This is purely for educational purpose. This is not and should not be taken as an investment advice. If you go ahead and buy Pfizer and later on the stock tanks, it's not my problem. Okay, find your own advisor. My goal with this video is to help you get educated about the process to analyze a stock in order to help you decide whether or not you want to buy a particular stock. Okay, so with that out of the way, let's jump into the educational part. So when you go through a platform like Yahoo Finance, there are a lot of information, and sometimes it's a little bit difficult to make sense of it, right? Before we even jump into all the data to understand what they mean, let's look into the performance of the stock in general. So this chart should show you the trend of the stock in the last in a given period of time. So this is looking between somewhere in December to right now, as of now. So it seems like the stock of the price, as any stock, has been volatile. So there is substantial ups and downs, and with the highest in 2020 when in December 8th, 2020, when the stock reached about $42. And right now the stock price is around 39. The closing as of the time I am recording this training is $39.35. So you can also adjust to look into a specific time period you want to analyze a company. It seems like Pfizer highest point in the last in the last 5 years have been when the stock price reached about $33, 33.86 cents. So just by looking into this, you can also at the bottom see the sell and the buy, the sell and buy volume, and so forth. There is the dividends declaration, and it seems like there was a split of the stock. That's a different conversation. this is just to give you an idea in terms of where this stock has been in the past 5 years or so, right? So that's the first place you want to begin. And then, so let's go back to actually start making sense of some of the numbers. And again, so that's the previous close, the price that the stock was trading in the stock exchange as of today is May 11th. So the stock market closed, and that's the last price the stock was trading, and it opened at $39.68, right? And it seems like it's a little about 22 cents increase intraday, and the bid and the ask are basically what people are asking or willing to sell the stock for. And the days range, which is an important number when considering to buy a particular stock, it tells you the range this stock fluctuated in a given day. The 52-week range, which is an important number. So if you want to buy this stock right now, it's at $39-ish. And the 52-week range is between $29.9 or almost $30 to $43. So if you're buying at 39, you're basically buying at the upper end. So you're buying at a price the average investor spent between $29 to $43 in a share of Pfizer. So a good rule of thumb for me is try to buy a stock in the middle of that range. If it's even in the lower end, the better, right? And then you have the volume of shares that exchange hands or brokers in a particular day. And the market cap is basically the value of the company as of that specific day. So if the close is 39, the market cap is 219.5 billion. So if you get this market cap and divide it by the previous close, it basically gives you the number of outstanding shares. So the beta tells you the risk of this company. So the market risk, or the average company in the market risk, is 1.0. So any company with a beta below 1 is less risky than the market. Any company above 1 is more riskier than the average company in the market. And if you understand a little bit of the trade-off between risk and return, there is an implied assumption that lower risk yields lower return as well. So with a company with a beta below the market, you probably should expect to see a lower return as well. So, and then the price earning ratio, 12 month, trailing 12 months, it's basically the information that is approximately, it's telling you how long it's gonna take based on the earnings of the company to recover the investment you make in, right? So for every share you buy, right, it's going to take you approximately 19 years before you get that investment back. And the earning price, the earnings per share, is basically the information about how much you will be getting per share you buy. So that's $1.95. So if you bought the share at 39, and that's the earnings per share basically. So you're looking into the all these information, the earnings date, the here target estimate. This is a Yahoo Finance indicator. Morningstar and other companies have their own valuation for any companies they are evaluating. So you can look into additional information to get to know the company and so forth, but I'm not gonna spend any time here. But there is actually an amazing resource that is completely free. This information in Yahoo about the financial information of the company sometimes is not accurate, but the best place to get information is either in the company's investors relation, Pfizer, or you can also go, so in Pfizer's investors relation, you can go, when you, a simple Google search should land you exactly to the right spot, and you go to the financials or annual reports. So from here, you can either look into quarterly information, or you can look into the stock information, the SEC filings, which is the most important information. If you want to invest in a company, you absolutely have to look. So the SEC filing information is what the company actually have to file with the government, and they cannot lie. If they lie, there is potential civil and maybe criminal prosecution coming. So, and all these filings, you have the filing form 4, 8K. The most important, at least for the perspective of the investor, is the 10K form, right? So let's go to the let's actually go back to that, to where we were. So from here we can look into annual filing. So you'll see 10K, they filed it in February 25th, 2021. So this is about the financial information of Pfizer as of December 31st, 2020. So let's look into PDF format. All right. So you'll see the annual report information, all the legal information, where the office is organized, Delaware company, their EIN number, but that's not the most important. But here's the some of the most valuable content you should pay attention to: the risk factor of the investment, any legal proceedings, and because you want to make sure there is no serious litigations against the company that may take a lot of the company's ability to continue in existence. And you also have the financial statements and supplementary data. So I often start by looking into the business to get to know what is the business all about, what are the key components, what's the markets, the sales, the channels, the distribution, and any major factor that affects the company. So that would be in the risk factors again. And if you go to the financial statements and supplementary data, you'll see all the information you need about this company. So by scrolling down, you'll get a little bit more of a sense of this company. And based on this information, annual reports are long. So you see these 175 pages. And a lot of the information in these documents can be really complex and challenging for individuals who do not have an accounting or finance background. Um, so it can take some time to learn everything, but it's important for each person to minimally educate themselves, because when it comes to your investment, your retirement, your financial life, you can't afford outsource that decision to your financial advisor only. You have to make sure that you are in the front seat having knowledgeable conversation with your advisor. And if they're making a recommendation about a product or a service, you want to be at a point where you can have that conversation, not only accept whatever recommendation they make, because at the end of the day, their job, or they are in the business of selling financial products. Whether or not it helps you, unfortunately, some financial advisor do not look out for their client's best interest unless they are fiduciary, right? So it's important for you to become knowledgeable, to get educated, to learn about investment, finance, the financial side of companies. That way you can make informed decisions. So going back to our financial statements, so let's go to the exhibits that the company have. I'm gonna scroll slower to make sure that I actually find the information of the financial information that I do need. Okay, slowly, financial information, and that the independent registered public accountant report. So this is the opinion the auditor issued. It's always nice to read it, to see the type of opinion this company received, the company you're looking at received, right? Because if they received a negative opinion, quote unquote, that should raise some flags for you. So you'll see the opinion. In this case, we have audited the financial statement of the company. In our opinion, the financial statement present fairly in all material respect the financial position of the company and the results of the operations and its cash flow. So that's a good sign already. You can go through the process and read information again. So their auditor, the KPMG, and then you start looking into the financial information. You have the statement of income, or P&L, profit and loss statement. So this is the company's revenues. It seems like it's relatively growing just a little bit. And then you start looking into the cost of doing business for Pfizer, right? So this is the year we're focusing on, and then there is the 2 prior years as well. But the number we're actually most concerned about as we begin to look into the company is the net income. So the net income is positive, but it seems like it declined substantially from prior year to the other year. So an obvious question would be why the net income declined. Seems like revenue stayed relatively around what we would have expect, but the net income did decline. So just by looking into the income statement, we can try to figure out what actually drove a decline in the income statement. So we know because of the pandemic, the company spent a substantial amount in research and development. Besides that, there isn't really any other major change in expenses than prior year. So it seems like in 2020, for example, the company had a substantial income. So the way to figure out what this income was about in prior year, we can read prior year financial statement or look into the footnotes, right? So, and in this year, we don't have that revenue or that income, right? And you can look into the financial statement a little further, look into this is the comprehensive income, is typical for publicly traded company, and we look into the balance sheet. So the balance sheet, we're looking into the assets. The total asset seems to decline from compared to prior year, and we look into the liabilities. And the most important part is the total equity. So it seems like the company is quite leveraged, about that's 90, 63, about more than 70% of the company is liabilities. That is helping the company to continue operating. So one of the biggest expense the company have is in long-term debt, as well as taxes payable. So it seems like the Pfizer really owes a lot of money to governments. Probably they'll get a lot of tax break because they have been phenomenal with producing the vaccine in this pandemic. So and then you have the owner's equity, but the document that is actually important to look at is the cash flow. And among these information, one key information is this net cash provided by operating activities, because this actually tells you whether or not, if this number is negative, in this case in the last 3 years has been positive, it tells you that the company has been able to generate enough cash to allow it to finance its own activities without having to use substantial borrowing and so forth. You also see investing activities, whether or not the company is selling parts of its operations or expanding or growing. And the financing activities, where the company is getting the additional source of funding to finance its operation. Is it borrowing money? So it seems like it borrowed about $12.3 billion in the short-term notes, and in the long-term notes they also paid some short-term borrowing, and they made some cash dividend payment, exciting for Pfizer shareholders, and they paid some long-term debts as well, and they also borrowed some long-term debt again. So this is just to give you a little bit of an overview in terms of looking into an investment before you decide to invest in a company. So my advice is, do not speculate in the stock market. Do not buy or sell stock because other people are doing so, but let your decisions be driven by data, by analysis, by critical analysis and assessment of facts, right? And not simply being led by the motion of the market. All right. I hope this was helpful to you. Again, if you want to be in touch with us, you can visit our website yetadvisor.com, or you can call our phone number, or you can connect with us in our page by dropping us a line, or there are many other alternatives here. So I hope to hear from some of you soon, and I hope this was valuable to you.